Hey there, everybody. It's Michael Martin. Thought I'd make a video for everyone today, too, in addition to the podcast. If there isn't a more crazy explanation for what's going on, it's probably in Starbucks. Here is a company that yesterday said that they were going to miss by like 47%. And then these are the headlines. You can see them yourself at, I guess this is Yahoo Finance, right? I just wanted to get something that was publicly available. Starbucks sees coronavirus hurting earnings for the rest of the year. U.S. declines are deeper than some analysts expected. Others fear customers won't spend the way they used to. So that all kind of comes through the ticker tape today. And what does the stock do? It's up a lot on the day. And, here we go right here. So this is what can you make of it? Well, maybe folks thought it was going to be even worse. And so 47% down was less painful than they had anticipated. Um, so maybe it was priced in, maybe it's not, maybe they don't believe it, maybe the recovery is going to happen. All I know is that you have to trust the price. The stock is up. It'll be interesting to see what they actually do report. And that's kind of like the way the world is today, right? I mean, this thing sold off, it got killed with everything else. They even come out and they give guidance, and somehow the stock is up. So I think this is important to kind of keep in mind that I don't know that you're out of the woods here on Starbucks any more than any other stock, but I do think that you want to trade small and keep some dry powder, because if there is another shoe to drop, whether it's going to be in any type of an economic outlook, you want to have some cash to deploy once you make a commitment to one number and kind of plunge, which was the subject of one of the recent podcasts. You're kind of married to that price, and then it's very binary as to whether you were right or you were wrong. I tend to like to scale into things, and then I like to offset the risk all at once. But this way, I don't have to worry about whether I'm right or where my timing is, right? So keep that in mind as you go through things. Starbucks is down a little bit in the aftermarket. Let me just take a quick look here. Not that that exactly matters. It was up $2.31 on the day. It's up 7 cents in the aftermarket. So go figure. As we go to take a look at some commodities, gold is probably the darling of all of them, always in the headlines. I mean, you could look at this. What we have here is the candlestick, and then at the bottom here we have a 20 period ATR coming in at $52.70. I know if you're a cloud formation guy, you can see shoulder, head, shoulder, this way, breakout, big move up. The point being is that this is the COMEX Gold contracts, 100 troy ounces, and with volatility being 2.5 times what it had been, even going back to Valentine's Day, you have to have an appetite for risk, because even if you're downtiming into intraday stuff, you still have to respect a 52 number on the ATR, because that bad news can hit the tape and volatility can spike from any particular spot. And while I know that you can bifurcate the price, the volume, and any other technical indicator when you uptime and downtime, I never really downtime my risk management tools. I always think the worst case scenario. So if I don't want to look and say, oh, well, the ATR on the thing, when you look at an intraday increment, is only $5. That doesn't mean it still can't jump 15 or 20 in a very short period of time. And so I let the leading indicator be this right here, just if you want some insight as to how I do it. That means it's $5,270 in average volatility on the big 100 troy ounce contract, which is this one. This is the June contract. So, if you're looking at risking 1%, that's, over half a million. 0.5% puts you at a $1 million account just to trade one contract. That's what's happened with volatilities these days. And I don't advocate, if you haven't been a very, very successful intraday or short term trader, I'm not quite sure that this is the time to start. If it is, you need to be thinking on risking like 1/10 of 1%, so that you can be very, very comfortable with what you're willing to lose. Now, there is an alternative. You can look at GLD. It virtually mimics if you look at the Big Daddy contract at COMEX, you can see the GLD kind of follows it. It's not a 24/7 market where, whoops, we're going to go there in a second. This is the market that includes, the aftermarket and what happens overnight. The GLD here is largely relegated to New York, so it does have a close, so you do see some gaps there. But nonetheless, with the ATR being $3.33, you might be able to position size this a little differently because you can't have a half a COMEX Gold contract, right, to cut what the vol is. And whereas you have futures margin in COMEX Gold, with this you're looking at Reg T, perhaps. And so, the way you fund the purchase is going to be different. But given the vol, you know, and the price, you might be able to position size this to be something that would give you a little bit more staying power so that if it did work against you, you don't have to take, you're not just stuck in that one contract where it can be really hit or miss in a very, very painful way, right? So you can always look at these alternatives. They might not have the sex appeal that the futures do, but your goal is, and again, this goes back to another recent podcast, you're trying to play superior defense. We want to make sure, yes, you have to take chances, you have to be in the markets to make money, but the money's so hard to come by anyway. You might as well do your best to protect it while you can. So trade small positions and trade with preserving your capital being your first goal, even though, yes, of course, you want to make money. As you had seen just moments ago with my fat finger, here's NYMEX Crude. This is after, these big green bars represent the news of some kind of production cuts. Who knows if you can trust them? Nonetheless, the downtrend is intact. There's a little consolidation here. The volatility on this one is also 3 and change, which is about $3,500 for the 1,000 barrel staple crude contract in NYMEX. They do have a mini, like there's a mini gold, so you can investigate those if you're dead set on trading futures. Or you can, like with the GLD, take a look at an alternative using an ETN, and this is the USO. That's the ticker. The volatility here is about 60 cents, so it's slightly more than 10%. But again, you can position size this and get exposure to crude if you think the thing's going to trend reverse here. If you look at this market, or NYMEX Crude, Victor Sperandio wrote about his 1-2-3 reversal that I've spoken about quite a bit. He has the 2B reversal. He also has a 1-2-3 reversal. So maybe if you see, a breakout above the high 20s into 30, you'll see that final part of the 1, 2, and then the 3 of the reversal. You can probably see it here as well on the USO. That's that. I don't have any conflicts to disclose. We did add some Exxon Mobil, ticker XOM, to some of the portfolios, but in the tiniest way. I mean, to say that you're dipping your toe in the water is probably an overstatement. Risk size, you're looking at basically 1/3 of 1% as the risk unit here, only because, who knows what you can trust out of OPEC, which is maybe nothing, and who knows what you can trust on the dividend, right? So that's the risk here. It's not so much about your position size and your entries and your exits. You have to also think about, the fundamentals. The price moves first and the fundamentals follow. I do believe that. But now, those things have to kind of move in lockstep. The fundamentals have to be there. So if they don't, that's when you're going to see a contrary move to the other side. So that's kind of the fear, is that if there is a glut of oil, they cut production, so then they have to absorb all that previously supplied crude into the marketplace. What does that do to Exxon Mobil's earnings? And then what would that eventually do to the dividend? So you have to trade it small so that if your timing is wrong, you can still withstand the shock, and then also perhaps look to add more on some type of a retracement and then the eventual rebound. One thing that's not making the news was the move in the Brazilian real. I've heard it pronounced a whole bunch of ways. I have a lot of friends from Brazil. Some say real, some say real. Let's keep it real. You caught the breakout at 420. The thing moved up quite a bit and even went a little parabolic here. This is the interbank, but try to find it on a headline anywhere. So there are opportunities out there. that you can find if you keep looking hard enough. And we kind of coach to that too, is like look for stuff that no one's talking about, because you can ride those puppies for a long, long time, make some decent money. And then if it does get picked up by mainstream media, my guess is this one will not. But if it does, you might already have a position in it, and then you get to have everyone else who follows you pay a admission ticket to you by pushing up, the price further. I can't read into this. This is a currency, shoulder, head. Maybe it feels the other shoulder reverses. Who knows what's going to happen going forward? But the point being is that sometimes you can find these very decent, pronounced moves that are right under everybody's noses. And while everyone's talking about, the markets and the Dow and this and that and circuit breakers, something's trending somewhere. So hope that helps. You have any questions, you know where to reach me. Just trying to be insightful, get you thinking outside the box in these very, very challenging times, wherever you are. I hope you and your family are safe and keeping your head together. Mental health's important. If you haven't already gotten it, you can go to the homepage at martinchronicle.com and look forward to downloading a free copy of the audiobook version of The Inner Voice of Trading. I wish you the best. I'll see you again. Subscribe to the podcast. It's very, very insightful. There's a lot of little gems in there. Take care.